Hello guys. So today I'm gonna be showing us the easiest and the best way to trade one of the most popular Deriv synthetic index, Boom 1000 index. And without wasting much time, let's see how we get to do this and trade it profitably. So the first thing I get to do is to go to the higher time frame, and in this case is a monthly time frame. And I'm going to try as much as possible to work this whole analysis down to the smallest time frames or the minute time frames. So it will help those of us that trade as well on the lower time frame. So on the monthly time frame, the basic thing I try to get here is the direction of the market, so the directional bias. And mainly looking at our chart, we can see that for quite some time, this particular index was making a lot of highs. So we saw the market making a whole lot of higher highs and higher lows in the bullish direction. However, if I'm to zoom in more, we can see that even though the market was making higher highs and higher lows, if I'm to include a trend line here, remember we're trying to get our directional bias. If I'm to include a trend line here, we can see that this trend line was clearly taken out, and not just taken out, price broke the trend line and gave us, even though we could have taken this as what, a higher low, but the market ended up giving us a lower high instead. And to make sure that there has been a change of structure, the lower high ended up giving us what, a lower low. However, because we're on the monthly time frame, since the beginning of this month, there has been some sort of buying power in the market. Now, how do I mean? Now, we've just seen that the structure of the market had changed. So the market has given us a low, a lower high, lower low, because it has taken out the most recent lower high, lower low. Now, what we're seeing here is still buyers trying to push the price of the asset upward. So in this case, we'll say that even though the trend of the market has just changed to a downtrend, we have like buyers making a retracement. In other words, we just had a lower low, and now what the buyers are trying to create probably a lower high. And of course, we know that this market has the liberty to push all the way up to this point. So long as it doesn't take out the most recent lower high, then the market is still in a downtrend. So our directional bias, our general bias is that the market is now in a downtrend, but however, the market is currently retracing upwards. So if you ask me, Boom 1000 index from the monthly time frame is in a downtrend, but buyers are currently pushing the price up by way of what? A retracement. Then the next thing that we'll get to do would be to, let's take this out, will be to go to the weekly time frame. Now on the weekly time frame, as is customary, first we try to look to see if our initial take in terms of directional bias from the monthly time frame aligns, as well as also to see if we can get a simple candlestick chart pattern that we can work with. For starters, we said that the market was in a downtrend, and we can clearly see that here on the weekly time frame. What do I mean? We can see that the market made a low, a lower high, a lower low, and just like we also saw from the monthly time frame, the price is currently retracing. So where do we think price is retracing to? Probably to make a third touch of this trend line. Another way we can try to predict where we believe price will be retracing to. So in other words, price is pushing upwards currently. We can also do that by including our Fibonacci retracement tool. I'm going to be doing a video this week on the Fibonacci retracement tool because a lot of people have been asking for that a lot. So there's where I refer to as the Fibonacci retracement to golden zone, and there's a zone between the 61.8% and 50% mark. One way to also find out the strength of this zone when you're using it in your analysis is to draw it most times to the left to see if it aligns with any other form of support or resistance area. Now, if you look at what I have just done, you can see that price got to this level, it was rejected. Several times price got to this particular area, it was rejected, and we can see that the area clearly aligns with our what? Fibonacci retracement golden zone. So this gives me more confidence that if price should get into this area, I should be expecting a reaction. So just like we saw on the monthly time frame that the market is in a downtrend but making a retracement, we can see that clearer now on the weekly time frame with price moving upwards. So that means if we are to engage in this market, to be us looking for for buying opportunities in a much lower time frame, because why the market is making a retracement. However, as a swing trader, most times I like to wait for the opportunity that the higher time frame would present. Now, what do I mean? It means that if I'm to engage in this market and trade it profitably and more confidently and hold my trades for longer periods of time, I would rather wait for price to do its thing and get into this area and probably make a third touch of this trend line, and then I can start looking for my what selling opportunities. But remember, from the start of this video, I promised that I was going to break it down even to the minute time frame, so that for those of us that trade in the much lower time frame can take advantage of whatever opportunity it is presenting currently. So the next thing would be for me to go to the daily time frame. Now, the daily time frame shows us the most immediate trend for the day of the market. In other words, what's the market doing for that particular day? Now, the first thing that jumps out to me to support our journey from the monthly and the weekly time frame is that excuse me, is that the market, just like we stated, in a downtrend but currently retracing upwards. Now, one thing that I can see here is that price had created what? An inverse head and shoulder pattern. So an inverse head and shoulder pattern is a strong bullish reversal chart pattern. Now, what does that mean? It simply means that when the price of the market is going downwards and this pattern appears, then it's an indication that there's a strong probability that price wants to go in the upwards direction. So if I'm to zoom this, okay, if I'm to zoom this in, this is the left shoulder, the right shoulder, and then the head. You can see that it is in an inverse direction. So price just broke above the neckline, and just like we stated from the weekly time frame, that price is heading towards this area, either to make a third and even to probably make a third touch of this trend line before heading downwards or continuing in its what downward direction. So now on the daily time frame, if the question would now be, if I were to start looking for opportunities now on this daily time frame, what would I do? First thing first, now I already know that I have a strong bullish reversal chart pattern. Then I'll come here and include a bullish trend line. Now, for to trade an inverse head and shoulder pattern, let me just quickly explain that. If we have we have the neckline, all we need to do to trade an inverse head and shoulder pattern is to wait for price, having taken out the neckline, to come back and do a retest of this neckline. So once there's a retest of the neckline, then we'll be more confident that price is going to definitely continue upwards. From what we can see now on the daily time frame, the neckline is yet to be retested. So even though buyers are still pushing price upwards, there's every tendency that at some point sellers are going to push the price downwards to make a third touch of this neckline. And in that case, even if that doesn't happen, we can see that we already have 1, 2 touches of this bullish trend line that I just included. So there's also a strong tendency that price will come to make a third touch of this trend line. So that would be the point in which I'll be looking to get into this particular trade and try to go with the trend as the market keeps going upwards before it embarks in its ultimate direction of the downward trajectory. So the next thing now will be to go to the 4-hour time frame to see what's going on there. Now we can see that on the 4-hour time frame, the bullish trend becomes much more pronounced. So what do we do in this case? Like I always tell people, in trading, patience is key. So it would not be advisable. The price of the market is way up here now, so it wouldn't be advisable to start jumping into this particular trade, as you'll not be getting a good price to start buying. So it still all boils down to being patient and waiting for price to come back to this trend line, even probably break the trend line and make a proper retest of this neckline before heading upwards. Then you can start looking for what your buying opportunities with your stop loss beneath this neckline, and your take profit would be somewhere within this area. Now, having this on the back of our mind, it simply means that we just have to wait for this to play out. However, because of the way I trade, because I'm a swing trader, my own waiting game would be to patiently wait for price to come into this area before I start thinking of engaging. Because, like I showed us from the weekly time frame, if we go back to the weekly time frame, you will see that this was a very big drop initially, and price came here to test this trend line, and there's another big drop for weeks. So it's important, or it will be easy to see that if price should come in to make a third touch of the trend line, then there's a strong possibility that price is going to drop for weeks, for another for weeks again. So I would rather wait for this longer game, or this longer opportunity, than to just engage in anything that could stress me by way of now having to look at the trade from time to time. So this is my take on the Boom 1000 index. And if you're into the trading of Deriv synthetic indices, you can always compare this with your own analysis. As you can see, it's a very simple analysis. We worked our way from the monthly time frame down to the 4-hour time frame. So even if we were to go to the 1-hour time frame, we can see that there isn't really anything to go by here, as price is still heading up, even if I think that there's going to be a retracement. And of course, for those of us that trade boom and crash, you know that for the boom, it jumps upwards but moves slowly downwards. So I'm expecting this movement to come down to make a third touch of this trend line, or come back into this neckline. So this is where your opportunity lies, whether you're trading the lower time frame or in the higher time frame. So you can see that on H1, this is where the opportunity lies. If I go back to H4, it's the same thing. It will be better to wait for your opportunity here so that you can have a good or better risk to reward into this area. So like I said, it's a trading academy. You can always reach out to us if you want to learn how to analyze the market like this. Also, I have a free Telegram channel where I drop free trading tips from time to time, free trading signals from time to time. Also, I organize free training sessions from time to time for those on the channel. So do enjoy the rest of your trading week. And if you come by this, don't forget to like, share, and subscribe. Cheers.